Hi, good evening, everyone. Welcome back to the channel. So in this video, we're going to continue building on a series we've already started, which is ways to mitigate NAV erosion. So I showed a pretty blunt way to do this with trading options and stuff, which has worked for me, but I realize not everybody may be at the same level in terms of trading. Some people may be completely new to options. Not everybody has the capital to do it. So I want to go over things that everybody can do. Hopefully to help mitigate their NAV erosion if they happen to be in high yield dividend funds. So let's start out by sharing the screen over here. So the market had a really good day today. What they call the big beautiful bill, as they call it, passed today. So it's supposed to be signed tomorrow. And I think had that passed this morning, not commenting on any of the merits of the bill, but I think had it passed because of the tax cut provisions, I think it would have jolted the market even further today. But nonetheless, we had a really good day. So what I want to go over is, so say you're in yield max funds like Tesla or Misty or Coney. See, our dividends fell off last month. We got to get back on track here. But so say, let's go down here and say you're in, Tesla, which I'm still in, Misty, Coney, XYZY. There's a couple things you can do. And I just went over this yesterday with a person, actually a one-on-one coaching session. So, which I do offer, by the way, book it through my site or DM me on Discord. There's multiple ways to contact the coach, as they say. Okay, so what we're going to do, we're going to look at example trades that we can possibly do. So to start out with, just say you were looking at puts for Tesla. You're going to find that the options market for yield max funds is not very liquid. It's just not very good. Say you own, what do I own? 6,000 shares, no, 3,000. So say I was able to do 30 contracts of Tesla at the money. You never want to go at the money, of course, because in my case, I'm at a massive loss. So, and you don't necessarily want to sell puts because this is, as though you were going to buy this much more. So this isn't something I really want to buy more of, if I'm being perfectly honest. But I mean, you all do what you want. It is cheap. It's $8.12 approximately. But if you were to, do this, and of course, you're out of the money at this point, but it's in dollar increments. So see how it drops off. I mean, you could do this and, hope that there's like a run up. Or, you could sell covered calls if you own something like, say, Tesla, but you're going to see the market's not that great for it. Even if you go out to like a year later, sell to open, say 10 of them, you're talking like hardly anything. There's like nothing here. You see what I mean? So even if you go out to November, what are you going to make? $230? What's that going to do if you've lost, thousands in NAV erosion? So what would be a better strategy would be to look at the underlying. So like Tesla underlying, and not the stock, but, options. Options are how we're making money here. So sell to open. Remember, one contract controls 100 shares. So keep in mind your assignment risk. So if you were to go exactly at the money, you can see there's no meat on this bone because the market's already closed. But if you were to go next month, keep in mind your assignment risk, by the way, would be, 100 times the share price. So 100 times 312.5. So that's $31,000. Just say you were able to do two. That's like almost 65,000. But you could sell and take in some premium. Say you go out a week, the premium's going to increase by $300. Say you go out 2 weeks, the premium increases yet again. And then you're going to want to stay, see it's $5 increments here. So you're going a little bit out of the money, but Tesla is such a volatile stock. In fact, if it were me, I would even consider selling one of these right now. I wouldn't mind owning, 100 shares of Tesla, because Tesla is a stock that tends to recover quite frequently. So if you look at estimated amount, this is the premium you can take in, a way to offset NAV erosion. You caught me again. Does that mean I'm busted? I hope not. Okay, so these are ways that, and by the way, I did schedule this. So technically it was a little easier to catch the coach tonight because I did schedule in advance. By the way, happy 4th of July for all of us Americans out there. We are about to get the festivities started soon, but got to get business taken care of first. Oh, see, glad you're able to watch. Love that. Okay, so hopefully we can make everybody some monies here. All right, so you'll notice if you go out to like say another month, end of August, then it's even more premium. See that? And then if you go out to September, each month it's more and more premium. Shoot, I might even just do this for the heck of it. I can absorb, I think, in this account if I have to own. And remember, when you're doing stuff like selling puts to enter into a stock, you have to have the money in the account to be able to cover it, unless you're using margin, which I don't really use margin. It's there if I have to in case of emergency. But see, if you go to September 4,000, and then if you're able to do 2 or 3, you double or you triple it. So that's a potential play. And it would be the same thing if you look at, like, say, Coney. The options market is just not really good on these. So like for Coney, if you were to look at puts, sell to open, say I own 200 shares, so 2, and going at the money, there's just not much juice. See, $140, what's that going to do? You know, I mean, it's something, but if you consider our NAV erosion, my NAV erosion is higher than that. So then if we do, so we would look at Coinbase, then the underlying. So I would say looking at the underlying, you're looking at puts on this. So Coinbase is in the same ballpark as Tesla stock. So you would be probably looking at, if you have the same budget that you could potentially own some Tesla stock, if you had to take assignment, you could do the same thing basically with Coinbase, because they're almost at the same price point. So by July 11th at the money, basically, is $1,075. By the 18th, it does increase a little bit. And if you go at the mid, you're between the bid and the ask, so you get a little bit of a better fill price. And then the 25th, you're at $19.95. So if you were to do this, by the end of the month or a month out, you can take in some decent premium to potentially offset your NAV erosion. So, and then of course, there's all kinds of leveraged ETFs. I'm going to show one in the next example, which is a lot of your favorites, is Misty. So believe it or not, I have traded options on Misty directly. I've actually sold covered calls because I own 100 shares. So I have sold, if you look here, sell to open, there is some juice on these because of the price. So if I go out, say a month, you have to go out for like a month to realize any juice. It's like $85, at the money. But if you go any less than that, then see, it's less. If you go to like October, you're getting $180. So as you can see, there's not really much juice there. Even if you go to the put side, which I have done, and I've made some money back on these, but you're getting into the strategy of basically hedging with options, and options are a derivative product. So there's, inherent risk. But remember, when people use the term risk, I know it sounds like a scary word, but there's inherent risk in everything. There's inherent risk in getting out of bed. There's inherent risk in watching this video. There's inherent risk in me doing this video somehow, some way. There's always some component of risk in every activity we do. So let's see here. Happy MAGA Day. Who is Thonati M? Oh, we're going to get into that. Trust me. We're going to get in. By the way, did you reach out to me for a one-on-one, by the way? I think you did. You know how to get in contact with me, right? Because we're on a roll, with the one-on-ones. We've been given a lot of, I think I'm making people a lot of money, more money with the one-on-one sessions than I'm making them on here. So highly valuable stuff. All right. So, and we do it over Zoom, real easy. Okay, where are we? Let's see. Back over here. So yeah, what we're going to look at though is first the underlying MSTR. So puts on MSTR. Let me do puts here. So this one is a little bit higher than Tesla and then Coinbase, but it's in a similar ballparkish price. So what you're going to see, there's no juice on this one because this week's over, but one contract of MSTR, look at this, folks, $1,100 almost. And then if you go out to like the 18th, look at this, $14.95, 3 years away from when Columbus sailed, which is funny because some people say it was in the 1900s, which is ironic because this is 1900 here. How about that? See, it's like everything, thoughts, jokes are all in a confluence of events here. Profound, right? So 1900, August. See, so it gets higher, but where the real juice is, and this is a dirt cheap one, folks. Watch this. MSTU. This is one I've been using a lot of. So MSTU, if we go over here, put We're going to sell to open. And because this one is so cheap, look at this, folks, $8.64. It's dirt cheap. You can do 10 of those and get assigned. I mean, you're at $8.50. So 10 of these, your maximum risk is like $8,500. Hold on. Yeah, $8,500. I mean, that's, you know, that's a lot less risk than getting assigned on 100 shares of Tesla or 100 shares of, you know, Coinbase or the underlying actually MSTR. So say you were to go a little bit out of the money, you're going to see some juice on these. So 750. So look at this. For a fraction of the potential assignment risk, you can take in almost the same premium you would have taken in on the underlying and hedge yourself against these, you see? So this is a way to basically eliminate NAV erosion. See that? 1,300 within a month. Think about if you were to do this 12 times a year. So that's 1,300 times 12. So you're offsetting some significant NAV erosion there. 1,300 times 12, to be exact, 15,600. So you do this and you're making back a lot of what's eroding, you know, your NAV. Now, if you wanted to be risky, you could go further out, because this could go up. So if you go, the further out of the money you go, the higher the premium is going to be, right? And say, you know, you have a little bit of money and you really want to add to it. Say you double it and you're at like a $10 strike. And then say you push it out another month and a half to September. Look at that. $5,700. Think about doing that like once a month. You can not only offset your NAV erosion with yield max, but, and here's the big out of the wall idea. You can actually start doing this for, just a little secret between all of us on this live stream, for extra income. See how that works? Because guess what? Okay, offsetting your NAV erosion is one thing. That's mission accomplished. But guess what? If you're actually exceeding what your NAV erosion has eroded, what do we call that? Profit. That's what we want, right? So profound thoughts, right? Who is Rodney Shu? Enjoy watching your interviews. Yeah, thank you. Thank you. Awesome. Okay, so that's just a quick one for this evening. I hope that all made sense. Happy investing, you know, portfolio, you know, documenting my own personal journey. I guess the portfolio had another great day today. So yeah, I think I'm going to do it there. Keep those three. Oh, let me do a Palantir one because Mr. Dominic mentioned that one. Let's go over here. So if you're thinking of PLTY, watch the juice on Palantir. So yeah. So we're going to do, watch this one. Now it's funny because I got called out of Palantir stock, but what he mentioned is the 2X fund. And I know because I do the NVIDIA fund, which is a lot cheaper, but because of the price of this one, I know he's right. There's some serious juice on this one. See, this is good. I'm teaching people. See, he's already like doing beyond like what the coach is doing here. I actually haven't touched this one, but I knew when I saw Granite Shares 2X, I knew there was some serious juice on it. So if you were to just do one of these bad boys, you're picking up $2,000 in a week, $2,000 per week, basically. If you go out to August 15th, look at that, 4,000. Ooh, I'm getting tempted here. But keep in mind the assignment risk on this. Watch this. 100 shares of this bad boy is going to be, at the money, you're talking 28,200. So you've got to keep that in mind, because like for what I do, you know, 1,000 shares of this one, if I traded this the same way I trade NVDL, here's the thing, to Dominic's point. So the premium is juicy on this, and that's just at the money, right? So at the money, basically a month and a half or 5 weeks later, you're talking 45,500. If we go at the mid, you're talking 47,300, right? So, but if you're doing 10, which is my example here, you got to remember your assignment risk is, your assignment risk is going to basically be $282,000. 1,000 shares times 282 is $282,000, right? So keep in mind that's your assignment risk if you're doing that many. But if you're just sticking to one, that's even better. But the reason why I do funds like NVDL is because it's a lot less assignment risk. So if I do 10 at 80, which was way out of the money not all that long ago, I'm sure the premium's lower now because I've realized like 6,000 of it. But this is why I do 10 here, because the assignment risk is only basically 80. See? So, and then I went out to September 19th. This is the exact trade I did. See that? Now it's only 15,000 of meat on the bone, but I collected like, because I did 20. I'm doing 20. So my assignment risk is 160,000 minus the premium. We're down to 31,360. I collected, I want to say 37,000. So yeah, hence the 6,000 gain in premium. Let's just go back to PILT. Is that, what was it again? PLTI? The Granite Shares one. Let's just backspace here. Oh, look at this one. There's a PLTM, Platinum Shares. Ooh, got to check this one out. See, this is what's great when we're having these conversations. I just stumbled upon this by looking. Let's see what the premium is. What? No options. It must be too new. I think it literally just opened. Let me go back to the comments here real quick. Yeah, I do leaps a lot. I've actually made some good money on leaps. Last year, I made like between 8 and 10,000 on Apple leaps. Yeah, PLTW. That's right. No, he said PTIR. We're not going to look at too many, but he's PTIR. I just want to do basically if I was to go out of the money, like I talk about with NVDL, because we were just looking at the money. So if I were to go out of the money, say it gets to like 300, because I think Palantir is going to keep running. Look at this, 31.85. And then if we go out a month, 57.50. You see October 76.20, actually 78.35 if you do it at the mid. Now let's look at PLTW. That's one of your favorites, I know. The Roundhill Weekly one, that's a dividend one. I wouldn't really trade these on dividend funds, but you know, it's probably because it's weekly. Okay, at the money, there's a little bit of juice there. That's better than the other ones we looked at, like the YieldMax ones. But see how illiquid the market is basically between the bid and the ask? There's a huge spread. So if you don't get filled at a good price, you're going to get ripped off. Anyway, folks, I think that's going to do it now. Thank you all so much for tuning in. Please remember to like, comment, and subscribe. Smash that like button and join Discord. And we will see you all in the next one. Take care. Have a good 4th. I may or may not do a video tomorrow, but hopefully I can. Thanks. Bye.